2020, yeah.
I was stuck in my daughter's bedroom on a cardboard desk I got from Amazon, which I used to fold up and put underneath her bed. I got no clients. I thought, well, I got to tell people what I do here. I then just sat there and video recorded myself using the webcam.
So how have mortgages changed over the years, right? So my dog almost cost me as much as my bloody mortgage used to.
They are evolving slightly.
Yeah. And it's all about borrowing now. It's like, max your credit cards.
Where's the disposable income coming from?
Exactly.
You know, the two young people want to borrow up to their max. I brief them, I say, listen, this is going to sound a bit wild now, but are you guys like planning on a family?
Yeah.
You might max this out and it's affordable on paper, but I want to know what your lifestyle is going to be like. So I can, in good faith, get you this mortgage when you're just sat in this house and you're just looking at four walls.
So this week's show is, we've got Leigh Rowland, all the way from sunny Cwmbran, and he's got Fear Financial. So this should be very interesting because, of course, with compliance, we look after mortgage brokers ourselves and all kind of things financial, as long as it's consumer credit. So welcome to the show.
Thank you for having me.
No, it's no problem at all. Do you find this easy enough?
Just about. I went past twice, but that was my fault, not yours.
All right.
Yeah, so it was okay. It was good.
So just give us an overview of what you do, first and foremost.
Well, as you mentioned, we got Director of Fear Financial, which is a directly authorised company.
Yep.
With my major shareholder, which is Craig Skelton. Then I got Director of Mortgages Made Easy, which is an introductory appointed representative of Fear Financial.
Yep.
And then just launched an estate agency as well called Property Hotspot Sales with my other co-founder then, Michael Osborne.
So you're keeping yourself busy then?
Yeah.
Just somewhat.
Trying my best, yeah. And in my spare time, sort of coach football team.
Oh, Christ. All right, we'll come on to that a little bit later. So... Okay, so you got Mortgages Made Easy.
Yeah.
You got Fear Financial.
Yeah.
You got Property Hotspot Group Limited as well.
Yeah.
So, tell me, you got Fear, which is an acronym. Is that correct?
No.
Oh, it's not.
Sort of, I suppose. It was just when I was talking to Craig, who I mentioned earlier. You know, I imagine people sitting around massive boardroom tables coming up with the names for companies. I just said to Craig, because he had to have Craig Skelton Financial Group. I'd already had Mortgages Made Easy.
Yeah.
I said, is there anything you've ever wanted to call a company, mate? And he went, yeah, he said, actually. I said, what is it? He said, Fear, because it was in his wedding. It was a song by Ian Brown. And then then I said, Fear Financial. Well, that sounds pretty good.
Yeah.
And there's a couple of accountants who are quite cool, and they sort of say, don't be afraid of finance, that type of thing.
Yeah.
So then we were sort of playing on that a little bit. And then we both just went, yeah, that's fine. So we literally, instead of spending thousands on marketing, on strategies together, I just asked him a question, he answered it, and that was that done.
It's quite strange. When we were starting up the compliance guys, Nick had started up a company called Canon Compliance, first of all, because he's an Arsenal supporter. Me neither.
Yeah.
All right. And you can, and so we were having a meeting, a first ever kind of marketing meeting with a company called I Am Productions, a guy called Mike Winnett. Look him up on the internet. And I said, I hate the name Canon Compliance. I can't stand it. It sounds shit. Yeah. So Nick just burst out laughing. He went, look, I'm not precious. What do you suggest? I said, you're a compliance guy. I'm a compliance guy. We should just be called the compliance guys. And that is it. And that's where it came from. So it was quite simple like that. So I get where you're coming from. Yeah. Sometimes the best ideas are the most simplest ones.
Yeah, exactly. And then we just had a chat with a guy who's worked with me for a while about sort of colours.
Yeah.
The cloud symbol.
Yeah. And
we thought that you could use that and the different colours if we, like yourselves, go into different areas of finance. We can maybe change the colours over, keep the name, but change the colours with different departments of the business, for example.
I get that. One of your traits is cutting out jargon, talking to your customers nice, easy. And I totally get that. We look at, compliance guys, Trustpilot, and it says, God, we understood more in 5 minutes than we've ever been told more.
Yeah.
Is it just a matter of bringing things back to the basics for you, or just keeping it lean? Why did you want to go down that road?
Yeah, well, I was working in the voluntary sector until I was, till 2018. And then I went into mortgages because I was interested in houses. I was going to go for a letting agency, to be honest with you. That was trickier than I thought. And along the way, I met a few people who were very kind, said we're good at mortgages, whatever. But when I sat in the chair face-to-face with people, I could tell they couldn't understand what I was talking about. They couldn't understand what I was talking about, and it wasn't fair on them either. And I sort of knew what I was talking about. I was very, very new to it. So then I always put myself in the place the person I'm speaking to. And so I thought, there's got to be an easier way. And I was sat there in shirt, tie. I mean, look at both of us today. Sat there in a shirt, tie. I didn't have a briefcase, but I've even done a video where I punch a plastic briefcase. I had a blow up one. I just think, we're not into that anymore.
See if we can intercut that.
So and then I just put myself in their place. And I just wanted to take like the mystery out of the mortgages and the way we speak to people.
I like that, the mystery out of the mortgages. Now, there's a tagline for you.
Yeah, right? I think I might have used that a few times.
That's a good tagline, though.
Yeah, so it was just taking all the jargon out, speaking to people how you want to be spoke to. But when you're talking about vulnerable clients, really, you've got to slow things down. But not just that, just because in one way it was a sort of a marketing strategy it turned into, because now I think a lot of brokers are exactly the same, but back then it was still a little bit stuffy. A bit transactional, actually. It wasn't like building a relationship. It was a transactional sort of meeting and end, really. But I wanted to build relationships with people, sort of unknowingly at the start. But I got on with people okay, I suppose. And then they luckily want to come back and do the next mortgage, the next house purchase, the next mortgage, whatever.
Keep it as simple as possible. I talk to the sales guys here, and it's like people, when they contact us, because we have a lot of referrals, they want to know three things, and it's probably the same with yours. How much input do they have to have in the whole situation? How long is it going to take? And how much is it going to cost? And that's it. And I just say, just shut up for the rest. Just ask, just tell them that. And the more they tell them, spewing as I always call it, the more you spew, the more you're just going to muddle things up for them. So if the call ends with somebody saying, could you just send something over so I can read through it? You failed. It means you haven't explained it properly, and it's just been open, honest, transparent with these people. And again, it's down to earth, talking to them like we talking to each other now.
Exactly.
So tell me all about your social media mythology, how you've used that to kind of push you forward.
It goes back to what we were just talking about earlier, really. I just wanted to explain to people how mortgages could be made easier. That was the start of the videos they'd done. I think back about the time when you guys started. Just in the start of lockdown.
That's it, 2020.
I was stuck because I didn't have any returning. I had some clients, but I didn't have any returning clients. 2-year fix, 5-year fixing back. So I hadn't done it long enough. So then when COVID came along, no valuers can go out and value any houses. I got no clients. I'm sat there in Esme, my daughter's bedroom, on a cardboard desk I got from Amazon, which I was to fold up and put underneath her bed. And I thought, I got to tell people what I do here. So anyway, I then just sat there and video recorded myself using the webcam to do some videos. And God knows how, it actually went okay. I'd never really done videos on social media before. But then it sort of evolved then. I was listening to a lot. I'm not going to say it just came out of my own brain. I listened to a lot of podcasts. Craig's one who I ended up going on, and I was on that for a bit, and that's how we built that relationship. He was my business mentor, so I contacted him for that. Social for Brokers is another one I learned loads, took loads of free, I picked loads of free stuff up along the way. Anyway, worked out that you can't just put stuff out there. Although it was all educational as well. It was all educational. There was you'll be happy with it, no calls to action or talking about specifics. It was just giving people information about mortgages. All this, I compartmentalised it and went through that. And then it was responding. Having mutually beneficial sort of interactions with people on social media. Sometimes I enjoyed it. I heard an analogy once. It's like you're walking around a virtual town, and you're seeing different people's signs everywhere. And if somebody shares your sign and likes it, it's a bit unfair if you keep walking past their sign all the time. And then so I always tried to reciprocate reciprocate the sort of the likes, the shares, and also speak positively about people who have actually worked with you. And even if people haven't worked with you, speak positively about everybody anyway.
Yeah.
You know, what's it?
We never slag off competition.
No.
You know, again, the word competition is, I don't think anybody does it quite like us. You know, we do it very different, and there's lots of other companies out there and they do it very, very well, and leave them to it. There's enough business for everyone.
Well,
that's what
I was just coming to.
Yeah.
So when I first came into it again, I thought it was quite a cutthroat sort of thing, mortgages. But I worked out that if everyone supports each other and learns off good practice, there's enough mortgages to go around for everybody to do really well. Now, if somebody's doing well, I send them a brilliant. Then if I bump into them in a networking event, we got a great relationship. That relationship will lead to other relationships, and that's what I'm all about, really, is relationship management. Now, we've only just met each other, right? But it's great news that we have met each other,
exactly,
because then we can support each other going forward.
Absolutely.
So it was the methodology was education. Just educating people.
So how have mortgages changed over the years? I'm quite lucky. I'm 52 now, and I actually paid off my mortgage on Christmas Eve. Believe it or not, that was it. I paid it off easy. Thank you. So I do not.
One, no?
Yeah, no, I'm all right. Do you know the irony of ironies? Right, it was like I built my own house back in 20 odd years ago, and I would never have been able to afford my own house. It was literally, I gambled everything, you know what I mean? I just like, there's one point I had no house and I had this bit of mud, and that was it. I'm like, what have I done? And honestly, Leigh, I can't put up a picture, right? I am useless at DIY. I'm useless, right? When we built the house, my only job, I swear to God, was putting up the curtain poles. Every one of the curtains fell down in our house. Everyone. I am useless, right? Yeah. So to gamble that, you know, it was quite scary. And I subcontracted it all. But my mortgage at the end was like less than £400 a month for a 5-bedroom detached house, right? Now my dog, right? Her insurance cost me £310 a month, right? So my dog almost cost me as much as my bloody mortgage used to, which is shocking. But I love my dog more than anything. But you know, my son now is 22, and he's starting to save up. Like, when I bought my first house, I think I put something like a £3,000 deposit down. It was a 3-bedroom semi in Gowerton, a lovely neck of the woods. Yeah. Really nice landscape gardens and everything. Converted garage, and it cost me $52,000. That house did. I sold it 3 years later myself, because I used to sell cars. I put a sign in the garden saying for sale. I sold it in 2 days for £75,000, right? And I was happy with that. And like 3 years after that, then the house price is really rocketed up and it's worth 150. But hey, it is what it is. Yeah. Now, I went to look at some houses with my son, and a 3-bedroom, it was like £280,000. And I was like, what? How can they afford that? But the mortgages must have changed dramatically now.
Sort of. We're seeing a lot, you might, if your son does watch it, we've seen a lot more of gifted deposits from family members.
Right, okay.
Yeah.
He's so lucky. He'll be lucky.
Yeah. There are mortgage products. That's quite good, actually. They are evolving slightly. Yeah. There's sort of mortgage products which can be based on long-term rental income. Yeah. Santander just brought a product out with a 2% deposit. There are 100% deposit. There are no deposit mortgages out there as well. But there's no getting away from it. And this is like, I try to be positive all the time. First-time buyers are really going to struggle unless they live at home or their parents are going to give deposit. Because once you move out, that same house for $280, for example, the rent might be $1,400. Yeah. Where's the disposable income coming from?
Exactly.
You know, because the average wage in this area, if you look at two of those, you know, take the expenditure off, £1,400 off, how are you going to save 20 or 28? Say you even have a 5% deposit, 14,000.
Like, I don't know what they are. Are they Gen Z? You'll tell me, Saskia. What's the generation of your generation?
Gen Z,
is your Gen Z. So Gen Z, do you think that they have a different ideology than like our generation? Like for me and my wife, everything, we had to own it. We got to pay it all off. And I hate owing any money out. I hate that. Yeah. So does my. But it's all about borrowing now. It's like, max your credit cards. It's like, pay a interest-only mortgage. I don't even know if they are still going, if truth be told.
They are, but mainly for buy-to-lets. You can get them on higher incomes, and as long as you've got like equity left in the property, because they don't like taking the residential property off if you can't pay the interest only off, got a repayment vehicle at the end.
Yeah.
But as in mindset of, sorry, Gen Z, was it? I'm doing a mortgage at the minute with someone born in like 2003.
Wow.
Imagine when that comes through. And that comes back down to the broker then.
Yeah.
So because I worked with young people for so long, say two young people want to borrow up to their max, I'm happy to ask them sort of, I brief them. I say, listen, this is going to sound a bit wild now, but are you guys like planning on a family?
Yeah.
Are you planning on holidays, basically? Because you might max this out, and it's affordable on paper, but I want to know what your lifestyle is going to be like. So I can, in good faith, not tuck you up, get you this mortgage when you're just sat in this house and you're just looking at four walls. You can't afford a takeaway. You're worried every month. I said it wouldn't be fair, and they're like, oh no, we have got this planned out. They are really organised because they've got quite a lot of information at their fingertips that we didn't have. Yeah. So they can, I know it sounds daft, like budget plan, research, all on their phones.
Because the cars, like nobody would get a PCP when, like, because I come from an automotive finance background and car sales prior to that, and PCPs were just, nobody would have that. Nobody would have it. But now it's, get it back, brand new car. And that's why you see all these brand new cars and they got the new houses. My wife is going, how can they afford that? Yeah. We can never afford that.
And also, like you said, the mentality of the people who are borrowing are different as well. So even the borrowing when people are retiring, so say people are retiring now, they want to give their inheritance before they die, for example.
Yeah, because of inheritance tax.
Yeah, there we go. We're going back around to that.
Yes.
Well,
Reeves.
I tell you, that I will comment on that. That is the worst.
Deplorable,
tax.
Isn't it?
Yeah, I just cannot. I don't want to talk about any of that. But that one is. I can't say that it is terrible. Anyway, so what they're doing, people are inheritance tax wise, but also they're willing to release money from their property, for example. So the mentality of, we got to leave the house to the kids. Yeah. The kids now, the children rather, can then sort of chat more openly because they're more educated. Everyone's more educated. Yeah. So they can chat more openly with the parents and saying, oh, well, could you release 40 grand for me for now? And the parents can do that now with different products coming along as well.
So are there new products coming along?
Equity release has been around for a long time, but it had a really bad reputation. Yeah. And it's repairing itself.
I've had equity release loans and stuff. I remember it was big in the time. And again, coming from a subprime background, which I used to work in, and I remember seeing people's mortgages, and like maybe they'd have a £30,000 in Mansleton, Swansea, and they had the house value have gone up and up and up, and they've like the equity release, and I'm like, oh my god! And these people are paying an absolute fortune for it. But that's where the affordability came in 2008 or the crash and stuff.
I think they were coming in with cowboy hats on and on horses.
Literally, But like when I went to get my mortgage, it was literally, what do you want? Don't want it. Just sign that, mate.
Yeah. No, now it is completely like the
regulation, and it should be.